when you ask them, what's the best long-term asset to hold, the plurality, so over, the majority, it's not over 51%, but the highest group is real estate, right? So we know people want this. You look at why aren't you investing in real estate? And it's always, I don't have enough capital, or it's too risky because they don't know about the market, or it's not liquid, right? So we kind of addressing the biggest challenges that people have when it comes to investing. So those are kind of the challenges that we found and how we overcame them.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Josh Emison is a co-founder and CEO of Sansbank, an alternative lending and investing platform connecting multi-unit property owners seeking capital and average investors seeking asset-backed investments. Josh, welcome to the show.
Thanks, Sam. It's great to be here.
Hey, man, the pleasure's mine. Listen, there are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start, where are you now, and how did you get there?
Yep. So I started coming out of the Marine Corps, not knowing much about anything. I started a sales business selling franchises. Took a ton of time to learn about real estate, learn about blockchain. Then I met some great co-founders who've done stuff like this before. And now we're an early stage tech company that's pooling together loans in real estate so that anyone can invest in those pools of debt for as little as $100.
An early stage tech company, and break that down one more time, just so I don't miss anything here. An early stage tech company that invests in.
Yeah, so we originate loans to multifamily properties, right? Second liens, like we were kind of talking about before. And they have to be profitable, right? So we only loan to profitable companies or businesses or properties. Then we put those all together into a pool. So that way it's diversified. And we let people invest in that pool, right? So for as little as $100, there's no lockup period. So we have secondary markets, and they can earn passive income every month, right? So that was really my goal, was to put passive income into everybody's hands.
Now, are you guys holding these, or you mentioned secondary markets? Does that mean you're selling these off, or what? How does that process work?
Yeah, we sell them directly to the investors. And then if they want to sell them to somebody else, then it's just kind of like a peer-to-peer transaction.
So what are you selling to the investor? Because if somebody gets in for $100, I mean, they don't own a whole loan; they own a part of a loan. Exactly.
And they own a part of a whole pool of loans, right? So we fund these loans. They buy a piece of it, right? $100 is whatever percentage of that pool,
right?
And then whenever the loans are paid back every month, right? We get principal and interest back every month. They get their percent of that repayment from all the loans that are in the pool.
Right. Yeah, I mean, they just own a portion of that pool of loans, but you'd mentioned there that they can then sell out, I guess, whenever they want. But is that?
Yeah. So let's say they've held it and they're getting principal back, right? So that $100 now has $80 of principal in it, right? They can go onto the market and they would just post it and say, hey, I got an $80 worth of principal share. Who wants to buy it from me? And then someone could come in and buy it from them.
Now, do you guys host that transaction? Is there a platform that there is an active live market for those shares? Is this blockchain that you guys use in the back end to
Yeah, you nailed it, Sam. It's blockchain on the back end. So we're still fully compliant. So that transaction is hosted within our platform, right? Because we have to still maintain all the know your customer, the anti-money laundering rules and everything. But it's all hosted within there, and anyone who would want to, another investment, they can just go buy it from that market.
Got it. So you guys host the platform. It is all done on the blockchain. Tell me this. What were some of the challenges? I mean, this is kind of a hot topic right now. Like, what's blockchain going to do to real estate? And you guys are on the front end of it, right? Like, yeah. I haven't talked to anybody else really that there's a lot of people talking about it, but not a lot of people doing it yet, using blockchain in their real estate side of things. What was the bringing it to market challenges? What were the things that you guys had to solve? Maybe that there wasn't a solution out there for, and how'd you do that?
Yeah. So, we're not quite at market yet, right? We're still building. People can sign up at our website, sansbank.io, so they can be one of the first users. But what we're doing now is actually, so security tokens, that's what they're called, right? Because they're tokens that represent securities. They tried it back in like 2018 and they didn't have the infrastructure, right? So the things you're saying, hey, what's there, what's not there. Now everything's there. So it's actually entirely possible for you to have the right custodians, right? Which is very important if you're holding other people's money. There's low fees for moving things around, right? So that makes it profitable for us, right? So that way we're not paying $1 to pay a $2 distribution, right? And so that everything's there, right? I guess the challenges that we've been facing is that we are kind of building it from scratch, even though all the pieces are there. And then the other thing is that we still have to make sure that we're fully compliant, right? So there's still lawyers involved. You can't get rid of those, and they're expensive, right? So it's just making sure that we're working with them to ensure that we're doing everything that's necessary to keep all the various players. There's a lot of players in this, right? From a regulatory standpoint, we got to keep them all happy, right? And so that's it's not so much on the blockchain side; it's on the traditional finance side.
Yeah, and I got just out of pure curiosity, I have just the come to market. How do you even get there? How do you raise funds for it? What's it take to get something like this off the ground and running? I mean, there's a billion questions I have on that front, but I want to talk more about this blockchain idea.
Yeah.
Walk me through, I guess, either a technology you're using, or I guess how does that work? So if I go to sell it, you guys don't want to be handling, hey, Sam sold this to person A to person B. Maybe you host it on the platform, but you really don't want to know about it or talk about it or hear about it. It just happens in the background. I mean, that's the beauty of it. But I guess give me some more color to that, because again, this is a guy that doesn't even probably know the right questions to ask. But I'd love to learn more about.
Yeah, for sure. So for people who don't even know what a blockchain is, right? It's just a ledger. Right. So it's just a long list of transactions that can never be changed. Right. So every transaction is there and it can never be changed. And then you can automate programming on it to write whatever you want on that ledger. Right. So there are certain things that have to be written. So if you want to purchase a security from us, you have to gone through the show us your ID. Right. We have to make sure that you're a real person and that you're not on some sort of terrorist watch list. And that just allows us to put on the ledger, this person is legit, they're allowed to buy these, right? So now every time in the future you go to buy one, we just go back to that one transaction, says, yep, this person can actually get it. So that removes us, right? Because normally from other guys, they would have to, every single time they have to go through and be like, does this person have this? Does this person have this? We don't need that anymore, right? We do it one time, it's there, it can never be changed, it's good to go. So that's positive. I mean, I really, that's the biggest part, right? So every time you're purchasing these tokens, it's updating who owns what, right? We have to know who owns what. It's updating the principal left, right? Like I said, the principal gets lowered every month. You're getting paid back principal and interest, right? So we don't have to create some difficult programming to track that. It's just done automatically within each token. There's just a lot of benefits where we're optimizing the process, we're lowering costs, and once it's up and running, we've actually removed a lot of third parties, like lawyers and transfer agents and stuff like that. Because once we have it set up and it's good to go, it just goes.
How does this work? And I'm thinking, and this is a more nuanced question, but let's assume you get one investor from every state, right? Mm-hmm. And now you got to file all these blue sky laws, or do you guys have to file those, or is that done under different regulation? Or I mean,
yeah, that's a good question. So that's something that we're still kind of working through. So we're looking at doing a Reg A Plus, which is supposed to be under blue sky laws, right? Which is whole country, yep, good to go. Right. But we know that some certain states, right, might have further questions, and we're just prepared to take those as they come. But as far as what we've seen in precedent, like Reg A Plus covers the whole country.
Got it. No, that's cool. Let's talk. So now we got an idea of what the program does and the benefits you guys have found, obviously, by launching it on the blockchain. I guess when do you anticipate being market ready?
Yeah, probably about 5 to 6 months from now. And although we're on the blockchain, I just want to make it super clear that's totally back end stuff. Right. When you go and you look at the app, it looks like a Robinhood or whatever. It looks super simple. You're just buying shares of loans. You're selling them. Right. You don't need to know anything about crypto or blockchain or whatever, right? That's just for us.
Right. No, understood. Understood. I mean, it's essentially it's just the program that's running your front end.
Exactly. It's like the Amazon Web Service. It's like the cloud, right? Nobody cares. Nobody knows how the cloud works. They just know it's there.
Yeah, nobody exactly. That's exactly right. That's really cool. I want to get into the nuance of your business and talk about what you guys intend on acquiring. So you said it's obviously, it's second position multifamily assets.
Mm-hmm.
Who is your borrower in that position? Like, who's coming to you looking for a second lien on a multifamily property, and why? And then I guess also, how do you intend on finding those borrowers?
Yeah, so the borrowers that we're anticipating are those that own smaller properties, right? So less than 99 units, probably closer to the 20 to 50 range. They had a property for maybe a year or two, it's doing well, maybe a couple more than that. And they want to expand, right? Whether they want to do renovations, whether they want a down payment for another property, whether they want, there's tons of reasons that you could want this capital, right? And banks are either not going to let them because LTV requirements, right? Hey, you did a refi a year ago, you don't want to do it again, or whatever, right? So there's a lot of stringent bank requirements where you have profitable properties and or it's too low, right? They're like, hey, I just want $200,000, I want $300,000. Banks are like, hey, if this isn't $1 million, like, don't talk to me. It's not worth it for us, right? So we're overcoming all those barriers, right? So people who need the lower amount, people who need it fast, right? They don't want to wait 30 to 60 days for a bank. People who don't want to refi, right? They want to keep their rates from the last 2 or 3 years because nobody wants the new rates now. All those types of people are going to be the kind of borrowers that we're looking for.
Got it. I got it. So I mean, there's really two separate sides, I think, of your business. One side is the investor side, which is, and I would say this is true for anybody in real estate, but for you in particular, it seems like there's almost two different businesses running side by side, where one is like, hey, we've got to go out and we've got to acquire second position multifamily loans with, under 99 units and really target them. And then also we've got to go out and build the back end technology side of things and find investors. Tell me, when did you know that you had a good, a good product thesis or a good business plan where you said, hey man, I'm onto something here because I see a need here and I've got a unique way to fill it or fix that need?
Yeah. So then, again, two sides of the market. So two answers here. I grew up in a place with not a ton of financial literacy, right? Very, kind of average type of people. And as I got into selling businesses, and I became kind of like a consultant, right? Like, is this the right time to do it? Is this, what else can I be investing in? Blah, blah, blah. And my friends started reaching out to me and they're like, hey, I want to get into real estate. Like, what do you think? Or I want to get into business. What do you think? And I realized a lot of them wanted very passive ways, and they didn't want things that were too volatile, right? They were afraid of the stock market, afraid of crypto. The real estate, they understand it. They're not sure, right? Or they want to be diversified in equity and debt. And I was like, man, like this is a huge demand. People want this, right? And they want it at low minimum so they can test it out. And they want liquidity. They don't want to be locked up for 5 years, right? And so I kind of knew going in that this was just a huge demand. And then on the other side, I had some friends who had started pretty early in real estate investing. And now they were kind of selling their single family homes, getting into multifamily, and then they would just kind of get stuck, right? They're just a boat adrift because they either had to find more investors, but maybe they couldn't because they've only done one deal, or they had to save up for their next down payment or whatever. And I realized that there were people who wanted more capital, but they couldn't get it. But their properties were profitable, right? They were doing well and they were in good locations. I'm like, man, this is crazy. Like, these guys could be crushing it even more if they were just able to leverage their profitability. And that's what gave us the idea for the other side.
Got it. No, that's really cool. Tell me, what have been some challenges bringing this to scaling it? I mean, you've got so many irons in the fire. I'm thinking, both, like you said, from a regulatory perspective, from a finding investors perspective, to finding borrowers perspective. I mean, you got a lot of different things going on. But tell me, what have been some of the major challenges you've overcome bringing this to scale, and then how did you do it?
Yeah, I think you kind of hit on one of the big challenges, which is there's a lot going on, and being able to clearly articulate the different challenges, but like in their lane, right? Without them kind of bleeding over to each other. So I think that's easier. That's the easiest way for people to understand it, right? So it was, a lot of research, a lot of trial and error of explaining it. Be like, do you understand what I just said? No. Okay. Well, let me explain it differently. And yeah, just making people realize the potential on both sides, right? Because a lot of times someone's like, oh, well, I really get this side, but I don't really understand that side, right? Depending on their background, and where they're coming from. So I think those are some of the challenges, but I feel like the wins are kind of at our sales now, where we've nailed down how to explain those things, and we've nailed down the best path forward for each of these things. So that way we have good plans, solid plans for how to address everything.
Got it. No, that's really cool. Tell me this: when you think about the your investor avatar, or who is that person? Tell me that if you can.
Yeah. So we're looking really at millennials and younger, right? So 93% of that age group invest through their phone. So they're already primed to invest in things via an app. When you ask them, what's the best long-term asset to hold, the plurality, so over, the majority, it's not over 51%, but the highest group is real estate, right? So we know people want this. You look at, why aren't you investing in real estate? And it's always, I don't have enough capital, or it's too risky because they don't know about the market, or it's not liquid, right? And we solve all those things because there's no volatility. It's a loan, right? It's a fixed rate loan, so you know what you're going to get. It's low minimums, and it's not liquid. So we kind of addressing the biggest challenges that people have when it comes to investing. So those are kind of the challenges that we found and how we overcame them.
Got it. That's really interesting. Tell me what's your, I guess, anticipated, if you can share this on the air, maybe you can't, but what's an anticipated return profile look like? I mean, there's got to be some like idea of what an investor could potentially generate, through a platform like this.
Mm-hmm. Yeah. So we're looking at doing loans, 4 to 12% loans, right? Based on the property, and they would invest in pools based on the terms. So like 4% pools, which would be like the short-term loans, right, in really good areas, up to an 8% pool, up to a 12% pool. It's like a 10-year loan, right? So it's a little bit harder to predict, things like that. And so they could pick, or they could say, hey, I want to invest $100 in this pool, $100 in that pool, $100 in that pool, right? And it's IRR, so that's what they would be getting as if they were lending, right? It's not like a bank account, right? You're getting it as if you are the lender. Yeah, and those returns compound, right? Because if you reinvest, you're reinvesting your principal and your interest, right? So you're making interest on interest, which is how you get to compound interest, right? So it can grow pretty well over time.
Right, and I think that's both of those are cool features that we commonly lack. I think in the real estate space is the illiquidity, obviously, of our investments. I like it and I hate it. It's one of those things where it's like, well, I've already put my money in, so it's not like I can do anything about it now, and you just stop worrying about it, right?
Yeah.
That's a benefit of it, and then the downside is that it is an illiquid investment, and you guys are solving, I think, that part. And the other part of it is just the ability to reinvest principal and interest. I think that's kind of cool. I mean, that's something, again, that in the syndications that we do, there's no option for that. It's not like you can send that to me and say, hey, Sam, here's, I want to send back the $1,000 you sent me this month. Thanks so much. I can't do anything there's just no place to put it.
Right.
In that, especially in retirement accounts. I mean, that's a beef I have right now in my own retirement accounts. Like, oh, great, thanks for the distribution, but it's $800 from that deal, and there's no place to put that right away.
Yep. So yeah, you just brought up a couple more. You asked me like, who's the investor, right? Those are a couple more personas, right? So people between deals, they could put it in there for 6 months, right, till their next deal, and they can make way more than their savings account. People who have a savings account, but let's say they have, you got 6 months of your living expenses or whatever in a savings account. Okay, put 4 months of that into Sansbank, so that way when you need it, you can get liquidity, right? You have that those 2 months immediately to you. You put the other 4 months on the secondary market, but in the meantime, you've been getting a lot more than your 0.06% savings account, right?
Right. Yeah, you're being generous on that.
Yeah. Yeah.
On that savings account. No, that's really, really cool. I think we've talked about most of the questions I had: return profiles, loans, liquidity, let's see. I did have one, risks. Let's talk about that real quick. I know we're almost out of time here, but I'd love to hear, I guess, where you see risk in what it is that you guys are doing and how you're actively mitigating it.
Yeah, so risk in any loan is default and lack of payment, right? So the number one way to mitigate that risk, I think that's across the entire real estate spectrum, is good underwriting, good analysis. So we're mitigating that through our borrower platform. We actually integrate with their bank account, the bank account of the company that, like that, most properties are owned in LLCs, right? And that LLC will have its own bank account. So we would integrate with that bank account. So we would see from the source of truth all of the inflows and outflows. So we're not just hoping that they're giving us good P&Ls and good rent rolls. We know exactly what's happening, right? And then we're pulling in data. This is top of the market data that we can get that's very localized. So we can see projected population growths. We can see job market changes. We can see all of this stuff, right? Which helps us make the underwriting a lot more effective. And so that in itself is like the biggest mitigator of risk, right? So yeah.
Is there a way to systematically aggregate all that data? Because I love the idea, but seeing an active bank account and keeping track of their inflows and outflows on a monthly basis just sounds daunting. I mean, so is there a dashboard you guys have created where it's like, okay, hey, jobs are growing. Okay, hey, cool. Population's growing. Okay, cool. They're still maintaining a 6-figure balance in their checking account, whatever it is. I mean,
yeah, so they would integrate it and then forget about it, right? So okay, let's have two things, right? So one is the cash flow. That is a dashboard the borrowers can use. Actually, any property owner can use. They don't have to be a borrower from us, and it would just integrate all their things if they want to use their rent collection software on there, and they would be able to see our software just uses kind of like AI algorithms to create that dashboard where they would see their inflows and outflows every month, right? So that's that piece of it. All of that data that I was talking about before, that's on the back end. That's just for us, right? Part of our, getting that data, we can't resell that data. So that's for us to look at, and that's how we do the underwriting, but that's also automated, right? We're not personally going through and filling in Excel things, right? We're pulling it in through APIs, and we have the algorithms that are putting that together.
Got it. Man, that's really cool. Josh, I've enjoyed this conversation today. Certainly love bringing guests on the show that know a heck of a lot more about things like blockchain, how that functions, putting that all together and actually making a marketable product out of it. I look forward to seeing this here in 5 to 6 months when you guys certainly go live. Lots of fun having you on. Thanks for sharing everything today. Do appreciate it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, so if they're interested if they want to get a loan like this, we can do it today, right? It's just the investing that's in 5 or 6 months. We're raising capital, so if people want to talk to me about that as well, they can. But so the best way to sign up, if this is interesting to you as an investor, sign up on our website, sansbank.io. If you want to get in touch with me, my LinkedIn, Josh Emison on LinkedIn, Josh Emison on Twitter, or they can send me an email, josh@sansbank.io.
Awesome. Josh, thanks again, man. Certainly appreciate it.
All right. Thanks so much, Sam.